This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is a simple resistance line that I've been using for the past several reports. I mentioned during last week we had a kiss of that line, and then we had a sell-off, but prices are now testing this line. We left behind a little a short wick above the line, and then it closed back beneath it. But now, as this session opens, we can see that prices are peaking above the line. So right now I do still favor the short side. I would obviously prefer if prices were beneath the resistance line right now, but we're only talking about a matter of a few pips. I would place my stop about 50 pips or so above this resistance line and exit if prices hit that level, or more conservative traders would wait for a close above the level, and that's actually what I would prefer, to wait for a close above this resistance level. But again, anything can and will happen, so we have to be prepared for prices to move against us. The next chart is the Aussie Kiwi, and as I mentioned during yesterday's report, let me zoom in here, get a little closer view of the price action. The two major levels to watch would be the support near that 124 figure, and also the borderline double doji formation here just beneath that 127 figure. So just beneath 127 would be resistance, and again, just beneath that 124 figure would be support. So with prices in the middle of the range, there's nothing we're going to do at this moment. We're just going to wait for these levels or trades to materialize. As I mentioned during yesterday's report, I still do favor the downside here against that high near the 127 figure, but again, there's no place to enter right now in the middle of the range. I'd imagine prices to come down to that 124 level, maybe find some temporary support, but I do feel a downside breakout beneath that 124 figure would be the favored trade in my opinion. But again, anything can and will happen. The next chart is the Pound Swiss. Not much has changed here. Still just waiting for prices to come down and test the longer term support line formed from the late 2008 and the mid-March lows. That's just above that, just beneath the 172 figure where that line is located right now. So prices are about 200-300 pips away, and this is something that we can keep on the radar screen for the remainder of the week. The last chart is the Euro Swiss, and let me zoom out here, get a better view. This is the longer term resistance line. We can see prices broke above the line, and they're now testing it from the opposite side, and we can see that prices did breach it by just a few pips, and right now, and leaving behind a long wick on the upside. So this is an official test of the line. Ideally, I would like to see a long wick to the downside testing this line, but you can't have everything. So moving forward now, I'd still favor the bullish side on this pair. I'd look to enter right now with a stop maybe 50 to 75 pips beneath that line, and also, you know, the same thing holds for the Euro Pound as I mentioned before. Exit on a close beneath the former resistance line, which we are now expecting to act as support. And again, I can't stress this enough, you have to always imagine that you're going to be wrong on every trade that you enter. And when you enter a trade under that premise, it helps you control your risk better. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.